and welcome back to my channel. Today we're going to be talking about mistakes that investors make when investing in dividend stocks. Now, for those who don't know who I am, I go by One Cheap Compadre, and you're watching Cheap Compadre TV. Now, lately I've been watching individuals online, YouTube, Facebook, and many other social media outlets, and I'm just noticing a trend once again. And today I want to clear up a lot of misconceptions that I see when I watch individuals talk about their dividend portfolios. Now, the first mistake that a lot of individuals make is that they invest in too many companies. That's the first mistake that I see a lot of individuals are making. That's why they're not able to see a large sum of dividends either each month, quarterly, or annually. And the reason behind that is they're spreading themselves thin. They're putting their money in too many companies, where you can actually invest in ETF dividends, where you can have more of a diversity than buying 70 dividend stocks. If you buy ETFs dividend stock, it has a plethora of many different companies under one umbrella, where you don't have to buy so many companies. You have 5, 10, 15 different companies all under one umbrella. So this is one of the mistakes that I see a lot of investors doing who invest in dividends. They're trying to buy so many companies where they don't actually get to see the true essence of the profit that they could be making, because they're kind of nickeling and diming across their portfolio. They're trying to buy up too many companies where, in true essence, all you really need is maybe about 3 to 5 different stocks that you can actually invest in that will give you a return that's almost close to what you invest your money in. But yet you spend so much time investing in so many companies. Who has time to watch 70 companies? Who has time to see if this company, that company, this company, that company are companies that you can actually believe in and stand for and actually trust? I mean, do you really have that much time to watch almost 100 businesses all at once? I don't think so. So that's the main and the first mistake that I see a lot of dividend investors doing. They're trying to buy so many different companies where they have over 20, 30, 40, 50, 60 different companies, yet they're not making that much of a profit because they're spreading themselves so thin, where they should be trying to scale it back, where they can have just a few where they can look over. And you'll be surprised, the fewer companies you have, the more money you can make. I know that seems kind of odd to actually put your mind around, but if you actually did that, you'll see more profits at the end of the year. So that's number one. Number two, first of all, if you're investing in the stock market, or if you're investing in anything, you mean to tell me it doesn't come with a risk? You're in the stock market. You have to take risks, people, okay? Especially if you're very young. You should be taking more risks. You should not be so conservative when it comes to your investment. You mean to tell me that you're investing in the stock market and you're worried about taking a risk in a company? You're investing and trying to get so comfortable and having a company that is less risk, but yet you're not reaping that many rewards from it? Now, if you're investing, remember, without risk, there's no reward. You think millionaires and billionaires are wealthy because they didn't take risk? All right, so that's number two. Number three, I see a lot of individuals doing this where they show the amount of money they invest that's in their portfolio. Say, for example, you have individuals have $100,000, but yet you're only making at the end of the year $9, $10, $11,000. I keep saying this in all my videos. I keep saying this. If you have $100,000 or more, you should not be making $10,000, $11,000 each year. You should be at least doubling that or even making more than that. You should be like in a 20, 30,000, 40,000 bracket. You mean to tell me I have one portfolio that's outperforming your $100,000 portfolio? How is that possible? That means that you're not doing your due diligence. You're not really doing your research. You're really just following what other people tell you to invest in. And then you go ahead and tell other people to invest in it. But true essence, you're not really doing your research. You're just going off what other people tell you. Because I can see on your portfolio that you're just barely making it. You're just barely trying to stay above taking risks. You're just trying to invest in individuals may say to you online or on these news networks where you feel just enough comfortable that you can ride out to make a certain amount of money and you're okay with that. You should be making more. Step number 4, that's a mistake. Okay, you have low expectations. And what I mean by this is, there's nothing wrong when you first start that you're excited that you're making maybe $20 a month or $20 every 3 months or $20 a year. Okay, when you first start out, I understand you're new, you're excited that you're making a certain amount of money. But what I want you to think about is that when you see this amount of money, I want you to think to yourself, instead of getting excited about getting that $20, I see videos where people get about 30, 40 different dividend payments, but they're $2, $3, $4, $5, $10, and they add up to about $100, and they're excited, which is cool. It's fine. You're new to the game of dividend, but think of it this way. Start thinking about, how can I double that $100? What do I need to do, or what strategy do I need to start implementing in order to double that $100, or triple that $100, or quadruple that $100? That's what you should be thinking. Not getting excited that you're receiving this amount of money monthly, quarterly, or annually. You should be thinking, wow, how can I double that? How can I triple that? That's what you should be thinking about. Not getting excited about a few dollars, but getting excited about what strategies can I use in order to allow myself to even make 3 times, 4 times, 5 times. Those are the goals. Okay? That's another thing, a mistake people are not doing. They're not having a goal to set. Like, for example, say you first start out, okay, I want to get $100 for the month. All right? Next month, I want to double that. The next month, I want to triple that. You got to start having goals. Like, for example, let me give you a goal. I want to be able to make at least the same amount that I would pay for my mortgage. Then, once you reach that goal, then you need to be saying, you know what, the next goal I want to reach is I want to double my mortgage. Then the next goal will be probably, you know what, I want to make as much if I would be getting paid if I was working. So for example, if I'm getting $2,000, $3,000, $4,000, $5 a month, I want to see if I can reach that, if I can get the same amount each month that I will be getting paid. And then I want to see if I can double that. And then I want to see if I can triple that. That's what you need to be thinking. Okay, number 5. Okay, once again, if you have $100,000 invested or even more, you should not be making $10,000 to $11,000 a year. If you're only making that, then you need to reevaluate your strategies, and you need to maybe sell those stocks that you have and see if you can find better stocks that can bring you more money. Because if you have $100,000 or more invested, you should be at least making $25, $30, $40, $50, $60,000 a year or even more. So you really need to think about if you're really taking that much of a risk if you're investing, or you're just trying to just get by. All right, because if you invest, it's a risk. You could win, you can become very wealthy, or you can lose it all. So it's a risk anyway that you play it. So if you serious about making real dividend income for the year, monthly, quarterly, annually, whatever you're trying to do, then you need to reevaluate, see if you're taking or if you're just taking just enough to make a certain amount, or you need to take more of a risk. And then my last one is that people are investing in the same companies over and over and over again, which tells me that people are not really doing their research. They're just playing it by ear. Even though they talk a good game, they say the S&P 500, they put a few charts up there to impress you and talk like they know what they're doing. But in actuality, even Warren Buffett said, looking at these charts, you can't go by analyzing charts all the time and thinking that you're going to get the same results. Even he said that. So by showing people charts and saying that you're able to analyze the charts, and I'm picking the companies for the S&P 500, you're not really picking no company. You're picking the same companies all these other investors are investing in. So you're not really doing your due diligence. You're not really doing investing like you say you are. You're just telling other people about someone told you to invest in. That's not research. Okay, let's just be honest, people. If you're gonna be on YouTube or all these other platforms and trying to get people to invest, then let's be honest. If you're not getting your information, if you're not researching, and you just going off what other people tell you to do, be honest with people. If you're actually doing your research and you are not trying to play it safe, you're actually trying to take a risk, you're actually trying to make more than just being comfortable with just a little bit amount. If you're really trying to get serious and you really take dividend investing seriously and passionately, then you got to be honest with the people. Be honest with them. Don't try to put up a facade and act like just because you have $100,000 in your account that you know what you're doing. Because I see a lot of people with $100,000 in their account, and it looks like they don't know what they're doing, even though they're trying to act like they do. Okay, so if you like my channel, if you're serious about investing and you really want to learn about dividend investing, then make sure you subscribe to my channel and tell me, what do you think? Do you think that what I'm saying is honest to you, or do you think that I don't know what I'm talking about and you have a better way? If you do, put a comment at the bottom, let me know. Also, make sure to hit that bell for my latest content. And before I go, do not forget, subscribe to my channel if you haven't already. Bye.